Good morning, everybody. Hey, it is Thursday, the 6th of February. I know I have been out for a while. We'll talk about that and more and what's happening in the marketplace and jobs when we join Dave here in just a few seconds. Before we do that, though, I just want to remind you that there are so many things in this world we have no control over, but you can take control of your investment portfolio risk. And that's where it starts. Give us a call at 863-382-0037 to schedule your core retirement design. Hey, with that, we've got Dave coming up next.
FM. Good morning. It's 8:42. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And when all that legal beagle trunk starts, that means there's a major high holy day going on here because my favorite financial advisor is back with us, Phillip Statler from Statler Financial Services, to talk about what's happening to your money today. Phillip, welcome back. We're glad to have you.
Hey, good morning, Dave. I am glad to be back. I am 3 weeks post-op. I'll tell you, I am feeling good. I just don't have the stamina. I really went to the office twice this week and spent a couple hours. And then yesterday, I kind of maybe overdid it a little bit. I spent about 3 hours at the office. I went to my Kiwanis meeting, and then I tanked the rest of the afternoon and this morning. So moving a little slow this morning, but glad to be back with you. And this is the only day I'll be here this week, Dave. I'll miss tomorrow. I got a doctor's appointment, but be back with you next Tuesday for sure.
Sounds marvelous. You've been in our prayers now for the last 3 weeks, and it's so good to hear your voice again. Talking about money, I was pleasantly surprised when I picked up the phone, called you, and you didn't say, "So, did anything happen while I was gone?" Lordy, 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 it's been busy. We're back
I've been
to
following it, Dave. I've been following it. Believe me, I've been following all the
it's
stuff, ups and downs and stuff.
Yeah,
So
it has been fun. Yesterday and the day before, we kind of got back to something resembling normal again. Yesterday looked like a semi-normal day on Wall Street. Dow was up by 317, Standard & Poor's up by 23.5, Nasdaq up by 38.5. So we were kind of right back up to the nosebleed levels that we had. Almost back up to where we were before we had that DeepSeek scare last week, and past now where we were before we had the tariff panic on Monday. And it's been a roller coaster ride, that's for darn sure. But calmer minds eventually end up winning, and we end up with a semi-normal looking Wall Street picture to start us out this morning. And then we start the big flood of stuff that comes out because it's unemployment week. Yesterday, the ADP number showed within the range. It was a little beat over what they expected. On private sector, today we start out with the unemployment claim number, first-time unemployment claims for last week. A little bit more than they expected, but still within the range of a well-functioning and maybe even still a little overheated economy for employment. 219,000 first-time unemployment claims last week. Had a chart yesterday, Phillip, I found kind of interesting. And for the first time since the 2016 to 2020 cycle, the number of people looking for jobs and the number of jobs open are in the same zip code for a change. None of that 5 and 6 times as many job openings as there are people looking for jobs, which has to be something the Federal Reserve is looking at with a fairly favorable eye.
yeah, I got to think that would be good news for them. And the unemployment number being basically in line with expectation, and a little bit more than expected. But I just saw your productivity number come across my screen.
Yeah.
It was down by 0.3. They expected 3.3%, and it was at 3%. So it was productivity was or cost, labor cost was down just a little bit.
Okay, well, that's good to hear. We didn't have that because I had it showing the labor costs were rising because productivity, on the other hand, is not increasing at the extent people wanted. We like a 3% 3% productivity increase last quarter. Now we're looking at like a 1.2% increase in productivity on the workers. While we're paying them more, that's kind of an evidence that the economy isn't doing exactly what they'd hoped for.
Well, yeah, I mean, I just saw continuing claims as well, Dave. I know you probably don't pick that up sometimes, but it's up to almost 1.9 million. And so it's up like 39,000 this week.
It does give us some reason for pause and reason to make that federal unemployment rate report that we get tomorrow morning about 8:30 kind of a market mover, doesn't it?
It could very well be with some of the labor numbers we're seeing come out today.
Absolutely. It shows the economy is working okay, but we're not exactly at full steam ahead. And frankly, like we've been saying, a 4% unemployment rate is what the Fed's been looking for. We start matching up job seekers and the number of jobs available as being relatively close in the same zip code. I'm kind of wondering if this might be an indication, one of those good news, bad news things, that the unemployment rate ticks up a little bit. Will the market respond by expecting them to revise their outlook as far as interest rate cuts are concerned?
And who knows how they're going to look at things anymore, right?
Exactly.
But I will tell you this, Dave. The expectation for tomorrow on the unemployment rate is 4.1%, basically the same as it was last month. So we'll see where we come in, and that's that's riding in the right direction.
Absolutely. I did find one thing that gives me a little bit of a pause, and in terms of faith. You and I have been both kind of shaking our heads over the Trump administration, talking about how we got to have lower interest rates, got to have lower interest rates. Well, the new Treasury Secretary, Scott Bessent, said yesterday, no, President Trump is not calling on the Fed to lower interest rates yet. What he's calling for is to talk down the 10-year and the 30-year bond yields, which you and I would probably say kind of strikes us both as a pretty good idea.
Yeah, it definitely would be. I mean, from the last time I was with you, the 30-year has trimmed down some because it was getting almost to 5% again. It's down to 4.63 this morning. So it's definitely going in the right direction for Mr. Trump.
A little bit of jawboning doesn't hurt a bit, does it?
No, it doesn't. When especially when you're the president.
Absolutely not. We are still smack dab in the middle of earnings season. We've got darn near a who's who going on this week as far as reports out in the morning. What caught your eye this morning as far as quarterly reports out of the publicly traded companies?
Well, Ford kind of caught my eye because I follow them on a pretty regular basis, and Ford had a good quarter. They beat on earnings by about 6 cents a share. They beat on revenue by almost $2 billion, not quite $2 billion, but it was a nice day for them. However, they've got some warnings for guidance, and that has got Ford heading in the at least early in the wrong direction. They're down significantly this morning, about 5.6%. Trading about $9.45 this morning. If you remember, I mean, they've been in the last couple of years as high as in the low 20s. So they're really way off their most recent highs.
And that is kind of following the pattern that we've had so far this earnings season. Even if you beat the street by a mile, if you have a tick in your guidance numbers coming forward, the market responds very negatively, doesn't it?
Yeah, they do. It's interesting. I'm looking at some of the rating agencies, right? What they're saying, and Goldman Sachs has put a target that they think it's going to be worth $11 eventually. No, they don't say when, but hey, it's going to get up to $11. So there's some positivity out there when we look at some of the big banks.
But they're a little touchy about this year because, and in fairness, no matter which side of the political fence you're on, we don't know what the short-term impact of the new administration's economic policies are going to be. And yeah, there are going to be some winners and some losers off of it, no matter what ends up happening.
Yeah, Wells Fargo, they think that they're going to go down another 20%. So Yeah, it's flip the coin. Which rating agency, which bank do you want to listen to? That's the key.
That's kind of the story. Even though they all had a pretty good quarter, in fairness, I did end up having a really stellar bunch of financials when they came out at the beginnings of earnings season. They're still a little cynical about what the government's going to do to the economy.
They are. And then we've got some pharma reporting. Eli Lilly came out, and they had a mixed quarter. They beat on revenue significantly. They were only expected to make about $4.95 a share. They actually made $5.32 a share. Revenue missed by just a tad. I mean, really, just a tad. But under, well, they're actually up earlier. Let me see if I can find them here. There we go. They're basically flat right now. They not expected to open one way or the other right now. So earnings didn't help them a whole lot this morning.
We were kind of chatting about that before we went on the air. I'm kind of getting a coherent picture of big pharma, especially the ones that are getting so much money out of those GLP-1 injectable weight loss drugs.
Yep.
With all the new compounding pharmacies doing the generic version, they're all saying our guidance is going to be iffy for the next year. They're making a ton of money off of the brand names, but with more and more of the generics being sold, it's not giving them the most favorable guidance numbers you could ask for.
Well, that's true. That's definitely true. So, hey, this is one that we haven't talked about for a while, Dave, but when we have, it's not been good.
Mm-hmm.
Peloton reported they actually beat across the
Wow.
board. I'm sorry, I said that wrong. They missed on earnings.
Mm-hmm.
However, they say they're heading in the right direction. I thought a minute that said they gained, but they didn't. They're heading in the right direction though. They were expected to lose 18 cents. They lost 24 cents, but their revenue was ahead of expectations. And so they got a nice bump this morning because they continue to cut cost, and that loss is moving closer and closer to a net profit. They're up almost 18.5% this morning.
Well, good to hear. As badly as they'd gotten beat up over the last couple of years.
Yeah, exactly. They have definitely been beat up for sure. Trying to see who else reported. Bristol Myers. It looks like they reported their full year outlook is missing what Wall Street expected them to do in terms of revenue. And so they're trading down about 4.2%. And then we had, who else do we have? Oh, Arm and Hammer,
Mm-hmm.
Arm Holdings, which is, the good old Arm and Hammer baking soda. They're
Arm
slipping this
Holdings
morning. Yeah.
isn't Arm Holdings the chip maker?
Oh, maybe they are.
Yeah, I think that's Arm Holdings. That's the chip maker that does the reduced instruction set chips.
Well, they're heading down about 5.1% this morning, Dave.
Oh,
They missed on their top and bottom line.
that's
So,
probably the concern over the Chinese situation. Resetting the table this morning. It was an up day yesterday on the equities market. What are we doing 45 minutes before the real money gets thrown around this morning?
we got a little bit of green ink this morning before we get going. Today, we've got the Dow up about 0.1%. S&P 500 is up almost 0.25%. And then the NASDAQ 100 is not up much, $8.30. So you can't say much there. On the other side of the coin, though, we've got silver trading down significantly, down almost 1.6% this morning, but it's been up almost to $33. So that's coming off of a pretty high number there. Gold's down about 0.5% this morning. Crude oil, Dave, you got to start talking that thing down a little bit. It's up 0.7 to $71.53 a barrel right now.
Yeah, we've been bouncing back and forth. The Saudis raised the price of oil on their side of the fence this morning, and that didn't help our oil futures one tiny little bit. But it's kind of nice to see it down in the 71 range for a change, isn't it?
Yeah, it is, because I think what I see it get up to about 76 at one point.
Oh, yeah, you and I were talking about it bumping its nose on 80 3, 4 weeks ago, so I'll take what I can get. Overseas markets, the Asian Rim generally up. They got a little optimistic this morning. Even the mainland Chinese markets were up by like 2% this morning. European markets are mixed this morning, but generally with an upward tinge. The average European index, about 0.75% up midway through their trading day. Getting my retirement to change from a dream to a plan takes having somebody that can help me get that plan together. How do I find you to get a plan for my retirement, Phillip?
Absolutely, Dave. That's why I developed the core retirement design to help people design that retirement they always dreamed of. And give us a call at 863-382-0037 to schedule their core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here tomorrow morning with me, and then I'll catch you next week. I appreciate it, and it's so good to have you back, sir. You've been in my prayers, and I'm glad they've been answered.
Thank you, buddy. I appreciate it. See y'all next week.
Take care. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
It's nice when you get everything on your list in one.
Folks, again, I want to thank you for joining us today. I'm glad to be back. Look forward to speaking to you again next week. Take care. Until then, bye now.